JPMorgan has just said there's a 60% chance there's going to be a recession. That means you could lose 50% of your money in the markets or more. Let's talk about it. Welcome to Equity Matrix. The QQQ, the Nasdaq 100, has entered a bear market. It's dropped more than 20%. The S&P 500 VOO is now teetering on that line as well. It's down around about 16-17%. So major things are happening. Major things are going wrong since the Trump tariffs. But it's not just the Trump tariffs which the media and everyone is blaming Trump for. I said earlier that the earnings on the major tech companies, the top six, your Apple, your Microsoft, your Google, your Amazons, or TSM, they all guided lower. So they was going up earnings 4 quarters straight. They all guided lower. Their earnings projections for this quarter, which is going to be end of this month. So the market was already jittery weeks ago. There was already signs weeks ago. Then there was the deep seek debacle where people thought the China AI was going to take over the USA AI, and it led Nvidia shares to drop and plummet. So there's already weeks and months prior to Trump been, for anybody looking at the markets, seeing a decline and caution. The markets were already frothy. The PE ratios, the valuations of the large companies, and a lot of companies, but some of the tech companies were frothy. They were elevated, and because the tech companies have such a large portion holding in the S&P 500, once they're affected and they start to fall, the whole index and market starts to fall. So look, let's talk about what Trump wants. One thing we know Trump has to do, one major issue in the USA, is they have a lot of debt to refinance this year. In the next few months, a lot, almost 10 trillion, around that number there. That's a lot of debt that needs to be refinanced, and the USA can't default. Them people, them investors want their money, their bonds, debt paid off, given back to them, interest paid, etc. But the interest rates in the USA was close to 5%. So refinancing 10 trillion pounds at 5% is crazy. So Donald Trump had to do something drastic. One of the things it's speculated, allegedly, that he purposely crashed the markets, gave out wild tariff guidance, wild tariffs to crash the markets, because now everyone's fearing. The fear in the markets are at highs, and all that money's ran into safety, which is bonds in the American dollar. And now the bond yield has fell from 5%. It's now closer to 4%. It drops just under 4% after the crash. So that could be a major reason why all these things are happening, because there's more important things that the USA has to sort out first than just worrying about the stock market and how the top 10% are making another couple million or billion on their few billions already. But yes, it does impact very small retail investors. You know, you could have lost a lot of money or paper loss, but we'll talk about it. But look, With these finance, the 10-year yield and interest rates going down, that also means that mortgage costs will be lower, borrowing costs will be lower. That stimulates the economy. So that will be good for a lot of people, for a lot of mortgage holders in the USA, which should, USA yields, the Fed rates, should help people in general in the economy. But now we've spoke about what could happen and this loss in the economy, in terms of the markets, we also have to see that a stock is a business. It's not just the price on the graph. It's a real business behind that stock. And if you hold a good business, I love Microsoft, I love Nvidia, I love Costco, for example, in the long term you do well. It doesn't matter what the price is, even though you need to buy at a good price. But I'm more concerned about the business. If you hold any of these poor meme stocks, these AMD stocks, these meme crypto coins, you don't know what's going to happen in 5-10 years. There's no proven history. So the number one strength you have is to hold long term. You can't do that with a poor business, but with a great business you can. Now, when we see these lower valuations, these lower stock prices, this blood in the streets, when the panic and the fear is setting in, now the skill is to know, which nobody 100% knows, how much further is it going to drop? Do you want to catch a falling knife? But what we do need to know, that if you liked Nvidia at 140, 150 and you was paying, it's now dropped to 93. So why should you not buy more? It's cheaper. QQQ is a safe bet, well diversified, but still heavily focused on the technology stocks, but I like tech. Then VOO, again, well diversified, 500 top companies. That's where you can put money if you don't want to buy individual stocks, and put a little bit in. Dollar cost average, put a little bit in every month or every week or once a quarter. The pain feels bad, but if you're a trader, stay alert to the downside, stay alert on your bottoms and your key levels to the upside. If you're a long-term investor, make sure you're buying good businesses and dollar cost average. You're tuned in, you was locked in to Equity Matrix. Check out our X channel, also known as, used to be called Twitter. Check out our X, like, subscribe. Thank you.